This is our Forex blog for March 5th, 2013, and for the last 6 or 7 years we've pretty much focused on using statistical methods to compare every currency to every other one on multiple time frames to let you buy the strongest ones versus the weakest and sell the weakest ones versus the strong. What we now do is we actually have created synthetic indexes that show, in this case, the dollar, the yen, the pound, the euro. You show that as a currency chart, and so you can very quickly see if it's above the hourly moving average in gray or the 15-minute moving average in green, if it's below the previous day's low, dotted red line, above the previous day's high. As you can see, the pound broke out and the pound index made a higher high. So basically, when you see a currency kind of going sideways and breaking out from below to above the hourly right here at 3, and especially above the previous day's high, that's a big sign of strength. And so you want to trade this super strong pound against the weakest one. Well, the euro is kind of going sideways. At 3 o'clock, you can see the dollar is just breaking down. It found resistance at the hourly moving average, which oftentimes happens, and then it started to trend down and broke out underneath its previous day's low. So at 3 o'clock to 5 o'clock, this one's above its previous day's low, as is the yen, which is also above its hourly moving average. So you wanted to buy the pound dollar. And once you have identified a currency to trade, strong versus the weakest, you can bring up any time frame chart from minute-based, for instance, 5-minute chart. Let me put that on layer 10 here, or actually layer 11. And you can see from that 3 to 5 o'clock period, the pound dollar went up from 51.20 all the way up almost to 5,200. And you can use minute-based charts. A lot of our traders like to use 2-minute charts or range charts. It doesn't make any difference really. Whatever time frame that you like that lets you spot pullbacks. Once you see a strong trend up, look to buy a pullback. I like 15 to 25 pip pullbacks. You know, it's kind of going up here. It failed. You would have probably had a break even or maybe a 5 pip win on that first trade. In the second trade, you would have been in a little bit before 51.40, and you can see it exploded up. Another tool that we just recently released is our perfect oscillator. And the reason it's a perfect oscillator is it doesn't use periods like other tools. It uses statistics, and basically currencies at and above the 80 level have gone up too much and are very likely to pull back. As you can see right here, at this point right here, it's gone up a lot, so you really want to kind of wait for some kind of a pullback. And a lot of times when it comes down to either the zero line in the middle or our Bollinger Bands off of our indicator, those are excellent places to get into trades. And you can see this one broke out and went up, and this was a huge move. You wait for a little bit of a pullback, you might have had a small loss, you get back in here, you have a 10 pip win. But notice this lower Bollinger Band right here, pretty much time the low of that move. You can use it to, during dead times, get in and out with 5 to 15 pip moves all the time. And also notice, oftentimes when moves are over, you will see a fib-based move. This retraced 62% of the way back up, right to the 61.8% fib. And also notice it's at an extreme. This is oftentimes how reversals happen. And so you could have got into a nice little counter trend trade here and made 20 pips real fast. And at that point, you're not sure if it's going to try to go back up or down. But when it breaks these lows right here, you have a very high probability 20 to 50 pip move. And you already have your profit target ahead of time right here. Notice where it stopped almost to the pip at the 1.618 fib target. So you can use this to trade with the trend and also counter trend. Let's take a look at some of the other pairs to see if there are some other ones either stronger or weaker than the pound, or weaker than the dollar here. Take a look at the Swiss. I'm putting this up full screen. Notice how this came down to the low last night and found support here when it broke underneath there at 1 to 2 o'clock. This is an event that's very likely to give you a profitable trade. So from 1 to 2, you want to find one of the strongest ones So 1 to 2 in the yen. This one busted through its point of control. This is the price where most traders have yen positions on all the yen pairs. Between 1 and 2, you can see it's in an uptrend. It pulled back. It's starting to go back up. Obviously, the Swiss yen would be an excellent one to sell. Weak Swiss, strong yen. And you can see you have a nice little flag pattern right here, and it fell about 15 pips. Notice where it stopped, right at the lower Bollinger Band over indicator. That's usually where price stalls and reverses, if you notice. You know, because very small percentage of the time do markets truly trend. The rest of the time they go up, they go down, they go up, they're down. And this is one of the best tools for not only trading that up, down, choppy price action, but when price doesn't reverse at one of these areas, it's a true sign of a trend that's likely to continue. So you wait for half an hour to 2 hours sideways rectangle pattern consolidation, or you wait for the first pullback after you spot a trend. So let's take a look at some of the other ones. Here's the CAD, and notice this one had a false breakout right here underneath the previous day's low. When you have false breakouts and they come back up and they kind of chop around and then bust through the highs of that bar at 540 right here, it's an excellent time to buy the CAD versus whatever's the weakest between 5 and 6. So let's take a look at some of the other ones between 5 and 6. This one had been trending up, pulled back, found support to hourly, broke through the hourly moving average. That's a sign of weakness. So looking for Euro CAD sell around 530. It's very high probability. Now, you're not always going to get 30 to 50 pip moves. Today was a relatively dead day, but you can see when that busted through here, you did get a quick 15 pips. And, you know, on dead, choppy days, when you spot patterns that can give you, you know, reliably accurate trades, that's wonderful. You can see the daily, weekly, monthly trends up. I use trend lines on these things all the time to spot, you know, what I consider relatively perfect times to enter. This was in an uptrend. We had a pullback where this level pretty much tagged here, and then it broke out. So a little bit after 6 or 7, especially when it breaks through the hourly right here, you want to look for buys in the Australian currency versus whatever the weakest one is. So let's take a look at that from 7 to 8, or actually, let's bring that back up here. A little bit, yeah, between 7 and 8. Let's find one of the weakest ones. 7 to 8, the dollar is above its hourly, came back above its previous days. You can see the yen's pretty much going sideways right here, chopping between that area. So you could consider buying the Australian yen. You know, if you have one currency that's strong, you want to trade it against one that's weak or one that's pretty much going sideways. It's not strong or weak. So Australian yen between 7 and 8, it's very likely to be giving you a buy entry. And pretty much it never really busted out through these highs until about an hour and a half later. And you can see it went from 95.40 all the way up to 80. That's a 40 pip move. More than likely you would have got into it and only made you know, 15 to 25 pips and got out of that trade. Pretty dead market. Let's try to find one that's was actually weak at that time. Here's a New Zealand, which was strong earlier in the day, came down, found support to hourly, failed to go higher, and then went through the hourly right here. This is an event that most of the time will give you a profitable trade. Or I should say, for all the trades that are profitable, it equals more pips than the trades that aren't profitable. You know, you might have a 5 to 10 pip loss, but you're going to have a bunch of 30 to 50 pip wins and even more 5 to 25 pip wins. So from 3 till about 6, this is trending down. Let's find one that's strong from 3 to 6. I think it was the pound. Yeah, the pound busted through its hourly. It's kind of going sideways, and then you have a nice little sideways flag pattern right here. The pound New Zealand is an excellent one to be buying. You know, one's super strong, the other one's weak, and as you can see, you know, an explosion up. And most of the time when you get these plus 80 levels hit, it is the end of the move, and a lot of times you'll get a pullback. And when you get a flag pattern after that, It's showing you basically extreme strength, and you got a flag pattern right here. Our overbought, oversold perfect oscillator has pulled back into safe territory, and you buy, and guess what? You already have your profit target ahead of time by drawing your fibs on this, and usually it doesn't go much beyond the 1.618, and you can see at that time also it's right near the overbought level. It's not only at our upper Bollinger Band of the perfect oscillator, it's also at the extreme, and you're out. You know, you're in this trade maybe at 82.86, and you're out somewhere up here at 83.30. So nice, beautiful 40 pip move. And that's typically what's going to happen when you have one currency that's super strong and the other one's super weak. If one's making an event like this, going from underneath to above, it's hourly, going sideways and then breaking out like this, and you find it and trade it against one that's just going sideways, typically you're going to make 10 to 30 pips. If one's super strong and the other one's super weak, you're going to make 25 to 50 pips usually. That's what I've found with trading with our new indexes, and also the FX trend intensity that shows you exactly how strong or weak it is at that time.